Welcome to the Enjoy More 30s Family Finance Podcast, the only podcast dedicated to making life more enjoyable for young families by hitting on the financial topics that tend to weigh on us, stress us out, and distract our focus from simply enjoying life.
Welcome to the Enjoy More 30s Family Finance Podcast. This is the second series now, which is called Your Money Multipliers. So unlike the first Your Money Mindset series, where we were focusing more on higher level concepts for how we should approach money and finances really as a whole, namely viewing them as a tool to help remove anxiety and make life more enjoyable, this series will focus on more specific topics that affect your finances. The end goal, though, is really still the same. Any improvement that we can help make in any area that helps lessen the anxiety creates more confidence for us to focus on making life more enjoyable for everything kind of outside of that. Today's episode is called Bonuses Aren't Free Money. And what we're going to cover is what you need to know about how to approach your bonus and what you can do to have it make the greatest impact for you. Now, we've all been in the position where we have that pair of pants that we own. We don't seem to want to throw it away. But, it's usually a pair of jeans or something like that you have crumpled up. And, once in a blue moon, they seem to fit the occasion. And you put them on, they're a bit uncomfortable because you haven't worn them in a while. And you wind up sticking your hands down into the pockets to get them situated, fitted correctly, what have you. And lo and behold, there's money in the pocket. So you pull it out all excited because, hey, you just found free money. The first thing that we naturally think of next, that's going to be just enough to buy, and then you can kind of finish the sentence. And the money is gone. No one's reaction is, hey, that's great. I can't wait to get down to the bank and make a deposit. Now, if I'm a financial advisor and I don't have that reaction about wanting to run down to the bank with that $10 bill and put it in my checking account, then you and everybody else certainly does not have that reaction either. And the thing is, it was always our money. We just didn't know we were finding it until just then, and the emotional excitement and surprise influenced the reaction that we had. So what you need to know, finding money in your pocket is surprisingly similar to how a lot of people tend to treat the bonuses that they receive. They know they're coming, not quite sure of the amount most times, but when they do come, it can very much feel like free money. If you treat it this way, though, you are negatively affecting yourself in actually two ways. The first is pretty obvious. You're missing a potential significant annual opportunity to save more money and reach your goals more quickly. The less you save, the less you have long term. So that's pretty straightforward. The second, though, is somewhat less obvious. When you forego savings, you are also getting accustomed to spending more. So we have clients that may tell us, hey, I always just treated that as, extra money. I don't need to live on that in retirement. You don't have to worry about that because it was just, it's free money. Now, if you stop and think about what you spent it on, though, which is what we do with clients, that's often not the case. Let's say you spent it on vacations. Do you not want to vacation at all in retirement? How about home renovations? Are you never going to want to update your home again over a 20 to 30 year retirement? Whatever our current equivalent is to grandma wallpaper and slipcovers, I'm sure you're going to want to get rid of it at some point. So basically, you get hit twice. You're going to have less saved up, which is pretty obvious, but you will simultaneously, and more importantly, be accustomed to living on more because of that bonus. And a lot of the things that you're spending that bonus on now, you're probably going to want to do in retirement, which means that income does also need to be replaced to have the retirement that you're going to want to have. So what can you do? The answer is to plan ahead of time what you will do with your bonus. And it absolutely does not and should not be to save 100% of it. Now let's say you received a $10,000 bonus, for example. You could save maybe $5,000, go on vacation for another $3,000, and put $2,000 towards a home improvement. Just as an example, but any portion that you wind up saving above what you otherwise would have done can be hugely significant. Another way, which really requires a little bit more of an advisor to implement, is that we have some clients that when we do their projections, it turns out if they just save 100% of their bonus, they don't have to worry about saving any other amount of their normal paycheck to reach their goals. And some of them really, really like this mentality of, hey, this is free money that I get extra. Sure, you can have that. You can put that towards my goals, since it's really not part of the normal pay that I get every month anyhow. And so if I just can have the freedom to spend my monthly paycheck kind of however I want, and this bonus that just comes randomly once per year that I don't really think about can take care of me reaching all the goals and doing everything I want to do, then spending my paycheck anxiety-free would actually make me the happiest. So there are a number of different ways that we can approach it, but using some approach to have this bonus reach our goals and reduce our anxiety in the process is what we're trying to accomplish. Overall, there are different ways to approach it, but any way you happen to look at it, if the end result is you save more money than you otherwise would have, then you're giving yourself those two advantages. One, there will be more saved down the line and you will reach your goals more quickly. And two, and actually more important in many, many cases, what you are accustomed to living on, and therefore what you need to replace in retirement will be less. So a quick summary of today's meeting. 1, bonuses are not free money, and you need to plan for what you want to do with those funds ahead of time. 2, if you treat it as free money and spend it, again, you're hurting yourself in 2 ways. Less saved and more to be replaced long term. 3, you do not have to save all of it in your plan. Any portion then benefits you in those 2 ways, more saved, less to replace long term. Thanks for joining us today. Because a lot of this can be very complicated, and a lot of times you may leave an episode and say, hey, I really need a little bit more information for how it applies to my situation. We've also added an Ask Joe section to the website. So if you go to enjoymore30s.com, that's enjoymore30s.com, you'll now find an Ask Joe button on the lower right-hand side where you could submit questions. We'd be happy to try to help and answer anything that we can to give you that additional resource going forward. If you enjoyed this episode, as I always say, please make sure to subscribe and review us on Apple Podcasts or wherever you listen. There are literally millions of young American families out there and trying to reach and help just like you. Every time you leave a review, every time you click a star, every time you subscribe, that helps us show up higher in the rankings so more people like you can find us. Now, the next upcoming episode is entitled Live It Up, Vacation Accounts. That will cover how to ensure we take the time for vacations and at the same time maybe even improve ourselves a little bit financially in the process. So thanks very much as always, and I'll talk to you again soon.
The conversations on this show are Joe's opinions and provided for general information purposes only. They do not constitute accounting, legal, tax, or other professional advice for your specific situation. You should always seek appropriate advice from a financial advisor, accountant, lawyer, or other professional before acting upon any content or information found here first. Joe is affiliated with New Horizons Wealth Management, LLC, a branch office of TFS Securities, Inc., and TFS Advisory Services, an SEC-registered investment advisor, member FINRA/SIPC.